Greetings, everyone. Clearly, I am not Ed Yordeni. I'm William Pesic. I am the Tokyo-based contributing editor. Ed is actually stranded on vacation. His flight was delayed by a day because of the nor'easter, and so he asked me to step in and walk you all through our latest morning briefing, and to talk a little bit about what's happening between the U.S. and Japan in terms of this new trade friction that we're seeing. Um, as I said, I'm here in Tokyo. It's midnight here. It's been a very busy few weeks here in Japan, not just because of the latest flare-up of the U.S. and Japan. Wait, sorry, sorry. Okay. Um, I apologize. I think we're having a technical problem there. Again, my name is William Pesic. I'm based in Tokyo. I am Yordeni Research's Tokyo-based contributing editor. Ed, at the moment, is stuck on vacation. His flight was delayed by a day because of a nor'easter. He asked me to step in and talk about our latest morning briefing, and also to fill in all of our viewers, in terms of what we're thinking about the U.S.-China trade deal trade war that's flaring up once again. In many ways, this has been a very, very busy time here in Tokyo, because certainly we have, or any day now we'll have a new prime minister. But this latest friction between the U.S. and China was a bit of a surprise in certain ways, and it certainly has made our time interesting. First of all, I should say that in many ways we are somewhat optimistic that this trade friction will pass. Right? In many ways, it looks as though this could be something of a negotiating tactic on the part of Donald Trump and on the part of Xi Jinping. Arguably, this started last Thursday when China announced a new ban on the rare earth materials. And a day later, you saw President Trump stepping forward with a 100% increase in tariffs on China. So we're talking about 130% tariff on Chinese goods. That effectively is a trade embargo between the world's two biggest economies. We're talking about $45 billion in economic output between the US and China. That effectively is a trade embargo. If this were to happen, this would lead to a very deep recession, and it will be a game changer for economies around the world. Now, that said, we are optimistic that, again, this is a negotiating tactic and that cooler heads will prevail. You can argue that President Trump has been somewhat frustrated recently by events here in Asia. I think within recent months, President Trump signed a tariff deal with South Korea and Japan, and he was riding high on that. But in many ways, these tariff deals between the US and South Korea and the US and Japan are in some ways in a state of flux. South Korea has announced in recent days that they won't be able to pay the $350 billion that the US is expecting South Korea to pay, the so-called signing bonus that President Trump is expecting. South Korea is saying that if they were to pay that money, it might lead to another Asian financial crisis without some kind of swap lines with the US. And so South Korea is making it clear that the US should not be expecting that money anytime soon. In recent days, you also saw here in Japan, the Liberal Democratic Party is very close to installing their first female prime minister. And Sanai Takaichi has talked about renegotiating the US trade deal. We're not really sure if she's very serious about that. That might have been her speaking off the cuff on the campaign trail. But I think if you're President Trump and you're looking at Japan, you're looking at the fact that we could have a Japanese prime minister very soon in power who is not terribly happy about the breakdown of the US-Japan trade deal, specifically the $550 billion signing bonus, if you will, that the Trump administration is expecting Japan to pay essentially in cash. And so if you're President Trump, you're also somewhat frustrated by what's happening in Europe. You had this trade deal with the European Union, a 15% tariff. And essentially, Europe in some ways is backpedaling on Trump's expectation that they would spend $750 billion buying energy and also invest billion as well. And so you have all these different moving parts going on, and and President Trump is looking for a way to salvage these trade deals, if you will. And so you have President Trump looking at China at the moment. Now, in many ways, nothing would make the trade war seem more worth it, if you will, than Trump having a grand bargain trade deal with the Chinese. In many ways, President Trump has been hoping for this grand bargain trade deal with the Chinese because it's probably the best way that he can explain to his base that this trade deal, that the tariffs, everything else were worth it all along. And that is exactly what I think President Trump is doing at the moment. He's looking for a tactic to cajole China, if you will, to negotiate the trade deal and to step forward and come to the negotiating table. That's one of the reasons why we are optimistic that we will see the U.S. and China come to the table and essentially agree on some kind of trade deal. The other thing, too, that we're somewhat optimistic about is the Supreme Court. Will the Supreme Court step in and essentially rule Trump's tariffs to be unconstitutional? And there's probably a very good chance that we will see that, right? I mean, in many ways, we have seen lower courts, federal courts, strike down President Trump's authority in this way. He's using, at the moment, authority under the International Emergency Economic Powers Act of 1977, IEPA. And this particular statute doesn't mention anything about tariffs. And there's a pretty good chance that the Supreme Court will essentially knock this down, knock this back. And for those reasons, we are somewhat optimistic that this latest bit of tensions will subside over time. That said, it is also worthwhile to game out what could really happen. Again, we're talking about a $45 billion trade relationship, but the two biggest economies, $45 trillion of output. And if this trade embargo does in fact happen, this would be devastating for the global economy. It would lead to a recession, a very deep recession. It would affect here in Japan. Certainly Japan would be collateral damage. South Korea would be collateral damage. And in many ways, we're looking at a situation where that would be a real game changer in terms of not only economic growth, in terms of not only where markets are heading in the year ahead. And in many ways, we're seeing that would be a very big game changer as we... I'm sorry that we get interrupted there. So essentially, we were talking about the extent to which we're optimistic that the U.S.-China trade deal will happen at some point. I think one of the parameters, though, that we're looking at is, Donald Trump in many ways is hoping for a grand bargain that would change the trade relationship between the U.S. and China very significantly. The odds probably favor something of a face-saving trade agreement between the U.S. and China that doesn't really change a lot of the trade relationship, but in many ways, it is a chance for the Chinese and for Trump to basically declare victory on some level. But that said, it is wise to kind of game out what really could go wrong here if we do see Trump moving forward with these 130% tariffs. There's many reasons to worry about the extent to which we could see a deep global recession, certainly. And one of the problems I think that we're seeing is that China's economy is not exactly state of the art at the moment. China is not coming into this battle in the best position, if you will. China entered 2025 with a deepening property crisis that's fueling deflation. China entered the year with very high youth unemployment. China entered the year in a situation where consumers they're saving a lot more than they're spending. And so China did not enter this latest trade skirmish, if you will, from a position of strength. At the moment, you can argue that China might have a bit of confidence given what we're seeing in the trade numbers, right? I mean, so the most recent trade figures that we're seeing from China for September we saw exports rise 8.3% year on year in September. And even though exports to the US fell 27% year on year, exports globally have increased, as I said, 8.3%, and imports increased 7.4%. And what that suggests is that China's domestic economy is not exactly cratering the way that many economists had worried. China has a 5% trade, has a, rather a 5% GDP target this year. And many economists think that China will have a difficult time reaching 5%. When you look at these most recent trade figures for the month of September, and you look at the fact that this is happening at a moment of maximum, uncertainty about the global economy, you can argue that China might feel that it has greater leverage at the moment to push back against Trump and his trade demands. However, the bigger picture is that Xi Jinping is not having a great year. I mean, one of the things we're seeing in China, aside from the fact that industrial production generally has been, somewhat shaky on the year, the property crisis is not going away anytime soon. And what we're seeing is that there's been a lot of efforts to throw stimulus at the problem. The People's Bank of China has cut interest rates. They've cut reserve ratio requirements. So we've seen some action there, but we haven't seen a lot of steps at the government level to clean up balance sheets of these massive developers. And we have seen more concerns this year about another big default among property developers. And so in many ways, you can argue that when President Trump imposes a 130% tariff on China, he has to be very careful, because the last thing you want to do is, in some ways, take an unbalanced economy like China and push it even more off balance. And so that's something that in many ways Trump needs to be careful about. And I think that one of the other things that we have to think about is the Chinese stock market is on quite a tear, if you will. Chinese stocks recently reached the highest level since 2015. 2015 was the last time Chinese stocks crashed, right? You saw Shanghai stocks fall about 1/3 in a 3-week period between July and August of 2015. And in many ways, Chinese stocks have become very frothy at the moment, you can argue. And there are concerns that gains in the stock market are outpacing gains in the economy. And that's another, if you will, pressure point in China. That's another concern that investors have to consider going forward. I think also you have to consider that the rare earth ban that we're seeing from China could be something of a game changer for corporate America if this does continue. I mean, in many ways, again, this could be a negotiating tactic when Xi Jinping and Trump sit down. Perhaps there will be some détente, if you will. Certainly, there have been some noises about the U.S. basically building some kind of, the equivalent of a petroleum reserve, if you will, of rare earth materials. But in the interim, it is very difficult for a lot of companies who are looking at the road ahead. I mean, if you look at companies like Tesla and Volkswagen, suddenly sourcing vital chemicals could become more difficult. You look at companies like Intel, Samsung, Taiwan Semiconductor, it will become harder to make chips. You look at companies like GE and Siemens, it'll be harder for them to make wind turbines without ready access to rare earth materials. Apple, Sony, they'd have a harder time making smartphones and headphones. And for companies like Lockheed Martin and Raytheon, suddenly they would have a more difficult time sourcing materials to make jet engines, radar systems, missile guidance systems. And so, for companies, this is not exactly where you want to be as 2025 in some way staggers to a close and 2026 is on the horizon. And one of the reasons why we think that we will see China and the US blink is because the alternative is just way too bleak for both economies. One thing we know about President Trump is that he's very focused on the stock market. If the stock market suddenly begins to stumble because of his trade war, we certainly will see him perhaps pull back from the brink. And if you're China, you certainly could see China step back from the brink as well if their stock market begins to become shaky over time. And one of the more interesting developments that we're seeing here in Asia at the moment, of course, is here in Japan. We have a new, as I mentioned earlier, we have a new prime minister who could be sworn in the days ahead. We're not really sure. I mean, it could be the first female prime minister, Sanai Takaichi. There are some concerns that her Liberal Democratic Party will have a hard time putting together a governing coalition in order for her to become prime minister. But at the moment, she certainly is the name that most economists, most investors are still looking at. One of the other things we talked about in this most recent morning briefing that ran on Monday was Germany. Germany's economy is also skirting recession at the moment, if you will. We did see that Germany in August, industrial production fell 4.3%, which was a lot more than expected. And when you look at exports, the way that they're falling in Germany, there are concerns about Germany, if not falling into recession, Germany walking in place. And the reason why this is a concern certainly is because Germany is the biggest economy in Europe. It's the economic engine of Europe. But this is happening at a moment where France is really stumbling, right? France has been very much in the news in recent weeks because of, President Macron has had a very difficult time hanging on to prime ministers. 5 prime ministers have been shown the door in a couple of years. And in many ways, all of these prime ministers are facing a very similar problem, which is figuring out how to pass a budget through a recalcitrant parliament, right? And so in many ways, France is having a very difficult 2025. Debt levels are rising. And there certainly has been speculation about France even perhaps knocking on the door of the International Monetary Fund at some point for assistance. That might seem like a reach for many people, but the UK certainly has been in the news for similar reasons. Not exactly another Liz Truss moment, if you will, but there are concerns about the UK economy too. But at the moment, if you have Germany and France walking in place, the 2 biggest economies in the Eurozone, that certainly is a concern for the global economy going forward. And that's something that we were focusing on in the morning briefing this morning. France certainly has been in many ways spooking investors. You saw Christine Lagarde, the European Central Bank president, speaking in the last week or so about the steps that Europe needs to be taking to increase trust in the euro so that the euro one day could rival the dollar as a reserve currency. And when you see what's happening in Germany and France at the moment, it's very difficult to see the euro rivaling the dollar anytime soon. And I think, we have seen a lot of speculation about, is this Europe's moment? And when you look at events in Germany and France, perhaps not. The U.S. economy, thankfully, has been more stable than I think many give it credit for. Your Denny research has been a lot more optimistic on the U.S. economy than many investors out there. There does seem to be some resilience in the economy that many investors and economists are not really appreciating. They're not really focusing on. Sure, the jobs market over the last month or two has in many ways stumbled. But when you look at what's happening in the broader economy, thanks to perhaps productivity growth, we are seeing the economy holding up pretty well. I mean, 3.8% in the second quarter is nothing to sniff at. And certainly the Federal Reserve is in a very difficult spot at the moment because the Federal Reserve is looking at the extent to which these new tariffs that Trump is threatening would increase inflation. They're also worried about the extent to which this might hurt confidence. And in many ways, if you're Jerome Powell, you're probably having a very, very difficult moment in terms of trying to figure out, what's happening in the economy, but also the extent to which artificial intelligence is changing the ground beneath the Fed. In many ways, you can argue that the productivity growth that we're seeing in the US, which is helping the economy perform better than many fear, that could have something of an AI component. We're still trying to figure out exactly the extent to which AI is affecting the economy as we speak. The economy genuinely is changing under our feet if you will, and certainly that makes 2026 a rather interesting year. But I think it will be an interesting period. Now, let me see if there are any questions from any of the viewers. This is my first time doing this, so I apologize. I'm trying to see if there are any questions. I couldn't see any there. Let me see. Oh, I apologize. Okay, so let's see. I'm opening a question here. Okay. Okay, don't see any specific questions at the moment. But if anyone does have a question, please feel free. But in general, that's the morning briefing that we ran this morning. And again, this trade war, this fresh trade friction we're seeing between the U.S. and China, it's an unwelcome development. But for the most part, again, we are optimistic that we will see the U.S. and China coming to the table and just discussing terms for some kind of trade deal. Maybe not a trade deal that changes the relationship in a very significant way, but something that will matter. Excuse me. One question is, when will we see the Supreme Court decide on the tariff issue? That is a very good question. That is probably a very difficult question to answer at the moment. Certainly the Supreme Court's latest session is getting underway, but the Supreme Court also has been known to make decisions on their so-called shadow docket. So we could see the Supreme Court stepping forward with some kind of surprise announcement at some point. I mean, certainly the Supreme Court understands the extent to which the global economy is focusing on this issue and the extent to which this would be a very big issue for the economy, for markets. And so we could see the Supreme Court surprising us at some point. Again, we do think that the odds of the Supreme Court knocking back what Trump has done here with tariffs is actually, the odds of it are actually better than many investors seem to think. Any other questions? Okay. Well, I thank everyone for their time. I apologize for the technical glitch that we had here. I apologize for the fact that I'm not Ed Yardeni. Ed will be back. We'll be back hosting this webinar next week. And I hope everyone has a very prosperous and safe week. Thank you very much.